Have you ever wondered why banks earn a 35% profit margin while manufacturers and wholesalers average just around 5% per year? Well, maybe it's down to sheer luck. That's not likely. Or maybe it's higher productivity. That's also not likely. But instead, the banks are doing something that the rest of us aren't doing at all. And they've been doing it for hundreds of years. And they're doing it on a $300 billion scale every day. And that's called clearing. So what is clearing then? When you transfer money from your bank to another bank to pay a supplier, the bank isn't actually transfer that money. All these millions of transfers supposedly happening every day, they don't make them. So there are no cash transfers like that at all. Instead, they sit down with other banks and see how much do we owe each other. It's $300 billion every day. And they match it off and settle the balance. Your transfer becomes merely a ledger entry. They settle everything like this 3 times a day with one net payment. That's very different from what you and I are doing in our businesses. Now, at Clearitt, we are offering the same advantages to you that the banks have been having for hundreds of years. You can also skip doing the cash transfers. You just settle things with a ledger entry and one net payment per week. This is very beneficial, and an average small and medium-sized business in Australia can save a lot of money. It could be even over $100,000, and that means you can have a boost to your profit margin just like the banks. So what are the typical benefits to an average small and medium-sized business? First of all, you get much better control of your cash flow as less cash has to flow, so that's more control over the business. You can do the payments in minutes rather than hours. You can simplify the accounting, reconciliations, and the bills recording. No payments need to be made, so you don't have to chase your customers about payment anymore. There are no transaction costs if there are no transaction plan. The risks are dropping. You get far less cash tied up in the business, and you can use that for other purposes. You need less costly external financing of your working capital. And then finally, your forecasts become more reliable and easier to manage because you know you can use less cash in the future, just like the banks do. They know they can net things off, so they don't need to keep an extra cash buffer. Okay, by now you should have an idea how the banks are doing it, why they're earning steady 35% profit margins, and what they are doing different. Now you understand that you can do something similar. And you can go to our website and calculate how much we possibly could save you. If this is of interest to you, book a meeting with us through the website. We can answer your questions and relate to your business. So the next time you get an invoice, you know you don't pay it, you clear it. Thank you for your time.